Hi there, welcome back to Closing Trades. Let's now get a sense of what the market is right now, almost at the day's high right now, 25,075. In fact, inching very closer to that 25,100 mark. We have Dilip Bhatt, founder at Pedigree Advisory, joining us on the fundamentals, and Srikanth Chauhan as well as Nilesh Jain joining us on the technicals. Good afternoon to all of you. First, Dilip, let's talk about the texture of the market today. You know, so much is happening in terms of news flow on that GST, on the GST front, and that Lok Sabha discussion is also underway. But markets are not, factoring in the outcome. They seem to be very chirpy today and at the day's highest point. What is your read-through of the market today? And in the near term, do you think that 25,000 is something that we can hold on to and good days ahead?
Well, I think in terms of the news flow, I think GST has certainly been a good supporter for the market. It has given a strong support to the market. But I think having said that, it's more of a hope and it's more of a long term that as they simplify the GST rates and as the trade-off, of course, is between the loss of revenue and the increase in the consumption. And in the longer term, I think the consumption should go up. I think which is a very fair expectation, which is what market is also factoring in. But in the short run, I think there is bound to be some amount of disruption. And if there is any delay in this implementation, I think we'll see that we are running into a festival season. And if there is some disruption, even in the festival season, buying on the expectation that either the prices will come down and people will start postponing their purchases. So I think all those things are weighing in the minds of the market and the investors at the moment. And not to forget that government has already given a good concession in the last budget as far as the tax is concerned. Maybe that is yet to play out in terms of boosting the consumption and the demand. So now GST is also being rolled out in a way which is very necessary on a longer term basis to do the business properly. So I think all in all, I would say that in the short term, markets possibly will still try to move sideways, in my opinion, because the fundamentals have yet to catch up with the kind of the levels the markets are at the moment. So they are not very expensive, and expecting that this year we are going to grow at 8 to 9% in terms of the Nifty EPS growth. Markets are very fairly valued, and I expect that markets would spend a little time-wise correction. That's what I think. And maybe I think as far as today, and on a day-to-day basis, there is more to do with the news flow that we are seeing, whether it is gaming, whether it is GST. And I think the geopolitical things, as they have made the markets a lot more volatile in terms of the news. And still the checkered flow of FIs is also playing in the minds of the investors.
All right, so that's the take coming in on the markets continue to be sideways, but yes, the markets are not looking that expensive at this point in time. But we also have Srikanth Chauhan as well as Nilesh with us. Very good morning, gentlemen, and thank you so much for your time. But Nilesh, firstly, your take on Nifty as well as Bank Nifty, because for today, Nifty Bank is seen to be taking a bit of a back seat, while Nifty 50 leading it from the front, and as of now, it's over 100 points of gain. Where do you see both these index headed?
Very good afternoon to you, Srishti. Good afternoon, everyone. As you rightly pointed out, the Bank Nifty has been a laggard. In fact, not only today, if you see in last couple of trading sessions, Bank Nifty is underperforming compared to the Nifty index. The good part is that Nifty has given a good breakout today. The much awaited breakout above psychological barrier of 25,000, and also 50-day moving average that was also placed at 25,020 that has also been reclaimed. So the short-term structure looks positive, and the momentum indicators and oscillators have turned bullish. So we are expecting a follow-up move towards 25,200 to 25,250 on the upside. So buy and decline should be the strategy till time Nifty doesn't break below 24,850. So that should be the stop loss, and we are likely to see a strong momentum towards 25,200 to 25,250 on immediate basis. Although Bank Nifty, we are not expecting any sort of a major firework as of now. Looks like more sort of a consolidation, but yes, gradual up move is something that we can expect in the Bank Nifty as well. So overall, 56,000 is something that we are keeping an eye on. If it breaks above 56,000 in the spot, that will be a breakout for the Bank Nifty as well, and then target would be somewhere around 56,500 to 57,000. But as of now, the focus should be on the Nifty index. given the support that we are getting from the IT space, which is looks like has bottomed out. So we are likely to see a momentum to continue in the Nifty index.
Okay, and in fact, Srikanth, I just wanted to take that point ahead with you and talk about the Nifty IT, the top sectoral gainer today, and how, right? Because 3% uptick is what we're seeing on the index just today. Names like Infosys, Coforge, Emphasis, TCS. So it's not only the mid caps, it's also the larger end of the IT basket that's participating in this rally. So looking very balanced. What is your take on Nifty IT, the kind of move we're seeing today, and how much of the short build up that we had seen on Nifty IT is covered so far? Srikanth, I believe you'll have to unmute yourself, please.
Sorry.
Yeah.
Good afternoon, everyone. So yeah, what you're saying is right. There is like good amount of short covering that we are witnessing in IT companies. Most of the IT stocks, they are recovering also on the back of there is specific meeting which is scheduled in on this Friday in Jackson Hole, and that will decide a lot about the rate cut interest rate path. So broadly, I am of the view that because of that, we are seeing buying interest in the IT companies. Otherwise, there is, we can say some value buying is happening, but otherwise, with a very short-term view, we can take call of creating some long positions, not with a very medium to long-term view, because in the medium to long term, I am expecting IT stocks to underperform. But in the near term, because of the overall momentum has changed in the market, we can see some buying interest, some short covering in IT companies. Otherwise, it is better to be more on the other side of the market. I'm to say there are a number of stocks which are doing well. Like today, we are seeing good amount of buying interest in hotels, as well as we are seeing buying interest in a few auto companies. So I think there we need to focus instead of focusing more on the IT companies.
All right, so that's the take coming in on the IT space. Yes, of course, not just IT, it's FMCG, select auto counters, they are buzzing too, but we'll discuss all of that and more on the other side of the break. Don't go anywhere, we'll be right back with more just after this quick break.